Joining us right now with his outlook for the sector and his squawk picks is Paul Meeks. He's Harvest Portfolio Management CIO. And Paul, how are you feeling about this in the aftermath?
So what I think is going to happen is we'll have a repeat of what happened only a month ago. And so if you take a look at the bellwether stock, Nvidia, a month ago, it did close at about 98, 99, even got lower than that in early August in the intraday move. And so we'll see how it goes. I imagine that we'll retest. And if we successfully retest that, then I'd probably go in and become a aggressive buyer again. Because in the last month or so, we had their quarterly earnings report and we had some other data. And of course, the company is going to slow a little bit, but it's still growing at a really good rate. The outlook is very bright. And I think the only thing that's really new that changes the thesis, I don't really think it changes it at all, is the subpoena that they've received from the Department of Justice, which is typical in the technology sector when angry competitors start complaining to the government. So I actually think it's a pretty good buying opportunity after with the smoke clears here, and I hope it's fairly soon. Today, it looks like the stock's going to open up at 106. That means it's trading at 29 times next year's earnings for 42% earnings growth, which is a nice discount, whereas the S&P 500 is trading at 20 plus times earnings. And it's probably trading at a PEG ratio of about 3 times, and the PEG ratio for Nvidia is about 60–70%. So I actually think it's quite attractive.
Following a steep sell-off on Tuesday that erased a record $279 billion from Nvidia Corp's market value, traders are searching charts for signs of when the suffering may end. Jay Woods, chief global strategist at Freedom Capital Markets, believes that $100 per share, or roughly the price of the lowest closing from last month, is an important mark to keep an eye on. Nvidia's stock fell to roughly $106 in early trade on Tuesday. I do not want to see the stock break out from the August low and set a new closing low. According to Woods, that would actually imply that something has changed, at least in the technical aspects. I predict a bid of about $100, after which it will trade sideways for a while. The chip maker's earnings, which fell short of high expectations, set off the most recent sell-off, which saw shares drop 14% over the course of 3 trading sessions. 2 research studies that were released on Tuesday and included cautionary remarks about businesses' use of artificial intelligence increased investor unease. Following the market closing, media channels revealed that Nvidia has received subpoenas in connection with an antitrust investigation by the U.S. Justice Department. This was further bad news. Michael Kirkbride, portfolio manager at Evercore Wealth Management, says that the lack of events on the calendar that could act as a catalyst is the issue facing Nvidia shares. We're currently in a bit of a vacuum. After earnings, there will be a plethora of economic data released this month. Before then, there is a great deal of caution, he stated. In a trading vacuum, the market turns into a very short-term, shoot-first environment. Nvidia's decline, which caused risk assets and global chipmakers to drop, follows a turbulent few months for the AI market darling. The shares have fallen 6% or more 7 times in the last 2 months, including Tuesday's loss. According to data published by analysts, the 30-day volatility index for Nvidia shares has likewise reached its highest point since mid-2022. If you want to keep up with Nvidia's latest updates and keep up with the stock market latest news, you can subscribe to our investing tutorial channel as we post daily updates about the biggest changes and catalysts in the market. So click the subscribe button if you don't want to miss the newest market updates. Now back to today's video.
All right, well then we got to talk about Nvidia. It's down 8% today. What's next for this stock?
Yeah, but I don't think it's down in isolation. Lots of things are down today, so it's not in Nvidia. So look, they had earnings last week. The print was actually was very good. It was fine. The issue that people had on it was not so much the revenues, it was the gross margins. They're guiding gross margins down a little bit into the end of the year. I don't actually think they're guiding them down that much. It's just mixed as they have some of their newer products ramped. And because it's early in those ramps, they have not yet optimized the cost structure. So I think that you'll be fine. Like they're not suggesting that margins are collapsing. They're I think into Q4, they're probably looking for like a 73 or 74%, down from like 75, which I mean, part of me wonders why we're even arguing about margins that are that high. But that was the primary concern on the call. It wasn't so much the numbers or anything else. I think beyond that, with Nvidia, the question now is, they're launching their new product. It's called Blackwell. There was a little bit of a delay. It doesn't seem to be impacting anything all that much. The big question is just what kind of an inflection is Blackwell going to drive next year? What kind of growth does it drive next year? I still don't think the numbers that are out there right now, at least on the sell side, are incredibly aggressive. Buy side expectations are higher. But it does seem very plausible that product cycle, once it starts going, could actually potentially drive another major reflection. That is going to be what probably drives the stock like into year end. I think right now people are worried, kind of treads water a little bit until those products actually get into the marketplace, and I get that. But once they start ramping Q4, Q1, I'd expect, if that ramp is solid, I'd expect the stock to probably follow.
Stacey, I only got about 45 seconds left. I've been nerding out over CUDA, which is this compute unified device architecture, and some of our viewers might already well know it, as that's been part of the thesis around NVIDIA. How much of that is still driving the investment thesis for NVIDIA versus other factors of the business here?
Well, yeah, it does drive it in the sense that people always ask, what is NVIDIA's moat? And that is certainly part of it. Like, it's not enough to have if you're a competitor, it's not enough to just have a competitive chip, right? There's the chip and the silicon and also the hardware ecosystem and the systems engineering and the software and everything else that goes around it that creates that moat. And in fact, some of their competitors like AMD have been, because they have not been able to develop that organically, they've been trying to acquire it. AMD just bought a company called ZT Systems, which actually brings in systems expertise. It was sort of a 1,000-engineer acqui-hire is what it was, but they're trying to bring in that systems expertise that they are now realizing that they need. AMD's also doing a lot of work around their own software. They call it ROCm. Intel has a software that they call it One API. They're all kind of work to work on this. But you got to remember, NVIDIA's been building out CUDA for 15 years. Once ecosystems get entrenched, it can be very hard sometimes to dislodge them, and NVIDIA at this point is pretty well entrenched.
In order to get a sense of where NVIDIA shares might bottom out, investors will also be referring back to last month. After plunging into a correction in August, NVIDIA's stock witnessed a 27% decline from a June peak before rising back to within 5% of a record. The dip's causes, which included macroeconomic trepidation mixed with fresh concerns about the sustainability of large-scale AI spending, are resurfacing now. A concern regarding the comparatively meager returns on the tens of billions of dollars that NVIDIA's largest clients are spending was the subject of research studies released on Tuesday by BlackRock Investment Institute and JP Morgan Asset Management. In the next 12 to 18 months, more demand from corporate customers, not simply from clients like OpenAI training new AI models, will be required to justify massive spending on the technology, according to Michael Sembalist, chairman of Market and Investment Strategy at JPM. BlackRock Investment Institute CEO John Boyven, meanwhile, stated that investors must exercise patience because it usually takes years, not months, to finish data center buildouts and increase processing capacity. Nevertheless, Boyven advised investors to continue overweighting AI equities, noting that there is room to rebuild holdings given the current sell-off in the technology sector. Woods of Freedom Capital and Kirkbride of Evercore ISI both maintained their long-term optimism for NVIDIA. While Kirkbride stated there is nothing seriously wrong with the company or its earnings report, Woods believes there is no need for concern over this week's decline. As long-term investors, we haven't heard anything to alter the narrative regarding NVIDIA, its clients, or their investment objectives, according to Kirkbride. With a 6.1% weighting in the S&P 500, NVIDIA may only be the third largest component of the index, but this year it has emerged as the benchmark's primary driver. Since January, the path of the broader market has been determined by the share price of the chipmaker, and this week's decline is not encouraging for the index. So what does this really mean for NVIDIA's stock? Let's find out, but first, if you made it this far into the video, thank you. These videos take a lot of effort and time to make, so if you enjoyed them, please hit the like button, subscribe to the channel. This goes a long way in helping us grow. That said, back to the video.
Indiscriminate selling here today. NVIDIA the worst of the bunch, but everything else down in the entire halo, including Broadcom. Traders not even waiting for those earnings, but they are coming up. Joining us, Jamie Myers, securities analyst at Laffer Tangler, covering the stocks. Jamie, great to have you. Pretty dark day here for the AI trade. What's up? Did we just take a week? Were people on vacation during Nvidia earnings or what?
Hey, Oliver. Yeah, it's a tough day for semiconductors in general, especially Nvidia leading the way down. We think this is just selling pressure coming off a quarter end. Nvidia last week, they delivered against the high expectations. We still see sequential data center growth through the end of the year. Hopper demand is strong. The Blackwell chip, they've fixed the casing on that, and they're going to release that, and they see several $1 billion worth of sales for the new Blackwell chip in Q4. So, I mean, the picture is still bright, and the enterprise wave of AI spending is coming to the tune of $50 billion a year per company. So, short-term pain. We think the long-term future is bright for NVIDIA.
You've got some good valuation analysis. Tell me how you're thinking about that for NVIDIA, because, there's a few ways to look at it. If you normalize it, to growth, it still looks like it's pretty reasonable. And of course, now we're pretty substantially off the highs of $140, so we got a little 40% off too. Well, more.
Yeah, exactly. And we're happy scooping up the NVIDIA crumbs. I mean, that's good business. We've looked at NVIDIA and the rest of the market in a number of different ways, and this is not a bubble in our opinion. These old economy companies are embracing AI to improve the margins, and like I said, $50 billion a year per company in CapEx spending. Tech still matters. And we see it broadening out, and we've been positioning for that for the rest of the year. And we really think if tech doesn't work, the market doesn't work. But we think
Tuesday saw a sharp decline in Nvidia, falling more than 9% and leading to a prohibition on short sales. The regular session saw a 9.5% decline in Nvidia shares, following news that the U.S. Justice Department has subpoenaed the maker of AI chips and others due to antitrust concerns regarding the company. The stock declined even further during extended trading. We can still place negative option trades even though short selling of the stock might be temporarily prohibited. They may also serve in a hedging capacity for long-term equity positions. I'm examining a bear call spread on Nvidia stock today. Selling one out-of-the-money call and purchasing another out-of-the-money call is known as a bear call spread. As long as the stock closes to the short call at expiration, the strategy can be lucrative whether it moves lower, sideways, or even slightly higher. You can sell an October expiry bear call spread on Nvidia for about $0.55 if you use the 130 to 135 strike prices. The option premium for traders selling the spread would be $55, the highest profit that could be made. A $445 loss would be the limit. That indicates a potential return of 12.36% from this point till October 18. If Nvidia's stock closes below 130 on October 18, the spread will profit to the fullest extent possible. The trader would then be able to keep the $55 option premium, since the spread would expire worthless in that scenario. The premium seller will lose $445 on the deal if Nvidia finishes above 135 on October 18, which would be the maximum loss. With a bear call spread, you always know the worst-case scenario ahead of time, and the risk is defined, unlike other option transactions where the potential for endless losses exists. If Nvidia trades over 120, or if the spread value increases from $0.55 to $1.10, one could place a stop-loss order. Traders who believe Nvidia stock could rise higher from here should avoid entering this trade because it is a bearish position. With a starting delta of -7, the position is essentially equal to being short 7 shares of Nvidia stock. Nvidia's stock is rated third in its industry area by the IBD Stock Checkup. It has an EPS rating of 99, a relative strength rating of 96, and a composite rating of 92. Please keep in mind that investing in options carries risk and that investors may lose all of their money. This video is not a recommendation for a trade. It is merely for educational purposes. Always conduct your own research and speak with a financial professional before making any choices about investments.